Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Russell 2000, ticker symbol RUT, and I've left my lines on the chart from last week's report so you can check the accuracy with your own eyes and see just how well candle charts work as a forecasting tool. As I zoom in here, you'll see that this diagonal line right here is what I drew last Friday, saying that I believe the market would go lower, and it's not a magic trick. What you're seeing here is exactly what I do each and every week, and you can see that the end of the line, being my target, is exactly where we closed this Friday. And after Monday and then Tuesday with a bearish engulfing pattern, we saw the sellers come into the Russell 2000. So what does this mean for next week? Well, there's an interesting pattern on this chart, and that is this hammer pattern. When you see a down leg in any market, whether it be a stock or an index, and then you see this very small bodied candle with a long shadow underneath the body of that candle, it generally tells us that the buyers are starting to move in. And that's part one. Part two is that the Russell 2000 stopped just a hair over this blue line, which is a 20-period moving average. So the 20-period moving average in many cases will act as a support level, and I believe that next week the Russell 2000 will start to move back up in an attempt to test this resistance high once again. Now, I don't want to go too far out in the future, but there's a good chance that the Russell 2000 will go up to test that high and then start to pull back. But we'll have to wait until next week to make that forecast. Now, if we look at the Qs, which is the Nasdaq market, also known as the power shares, you can see that the line that I drew last week is still intact. And I said that we would most likely move lower. We did. We came within pennies of the support level. And so what this means is, being at support, there's a good chance that we're going to bounce. And the main reason I say that is because if you look, the past 3 days have had lower volume bars down here. So that tells us that the sellers, which are pushing the stock lower, are starting to lose some of that momentum. So we might go just a little bit lower before rallying or bouncing. So I'm going to put my forecast right there for the Nasdaq market next week through the power shares. Now, if we look at the spiders, that's ticker symbol SPY. This is the S&P 500 index. We see that, once again, the market moved exactly in line with my forecast from last week. So next week, I believe, because we're seeing a hammer pattern on the S&P as well, next week I think we're going to move up and test this resistance line right here. I'm going to draw that as resistance. We'll keep that as a target. So next week I think we'll see a little bit of a bounce, but I'm not getting too bullish because we're still at an area of resistance up here. So with all the political tension that's going on in the world, and with the Fed raising interest rates recently, I don't see much that would prompt the investors off the sidelines that have cash and into the market at this point. But we'll have to see what happens later on as to whether or not the market will be able to hold this 20-period moving average. If it starts closing below that 20-period moving average and we see the volume accelerating, then that's our signal to watch out below and put in some protective stops to protect any of the profits that we have at this point. Now, if we look at the diamonds, that's ticker symbol DIA, the Dow did not move lower as I forecasted. So this is the only one that did not follow my line. We did have one day where we had a lower day, but it did not test my target price down here right around 210. So what I'm going to do is basically move this whole line over. I do believe that the Dow is going to pull back, probably more so than the S&P and the Russell 2000 at this point, because we have a long stretch of green candles and we see the volume is decreasing on those green candles. So Opposite of what we said with lower volume, the buying volume, when you see that decrease, that tells us that the buyers are starting to get tired. Therefore, we could see lower prices. Now, finally, the VIX, that's ticker symbol VIX. The VIX did go up right up until Thursday, where we hit the high from last week, and I'm going to zoom in here so you could see this. The VIX did move up. It didn't quite hit my target, but it did move up like I said it would. And now the VIX is showing a red candle. So what I think we're going to see for the VIX is a slight move to the downside to retest this support level right here, which, by the way, are record lows. And then I believe we're going to see a bounce in the VIX. Remember, the volatility index is a contrarian indicator to the S&P, so if the VIX starts moving up eventually, that could move prices lower in the S&P. So keep an eye on the VIX. Now, next Monday, we're having our open house Q&A, which is the 1 hour time that we put aside with our members, and we analyze stocks, we answer questions, and this is a free event open to the public. We do this every now and then where we do open it to the public. So if you'd like to participate in that, just go to themarketguys.com, scroll down, and you'll see a registration link right there. If you click on that, it'll bring you to the registration page. Pretty simple. You fill in your information and then you just click register, and your seat is saved. So that is going to be Monday the 19th at 8 p.m. Eastern Time. Make sure you bring your questions, bring your stock symbols. We're going to have an action-packed hour. So we'll talk to you then. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.